We want to bring in Brian Nagel to talk a little bit more about this right now. He's the senior equity research analyst at Oppenheimer. You can see the reaction in the stock. It was down and now bouncing back to down just 50 cents. Brian, what are your thoughts, just the guidance that you hear, the comp store sales?
Yeah, good morning, Becky. So, look, I'm looking at this report in relative to what we've heard, from Home Depot last week and a lot of the other chatter out there. It's interesting. This report from Lowe's is rather benign, which is interesting to me because remember last week Home Depot, further unnerved investors with a somewhat weaker than expected Q4 report and then dampened expectations for 2023. So if you look at these Lowe's results today, they're kind of consistent with what Home Depot said last week. We've also got to keep in perspective, Lowe's issued guidance. They held an investor meeting back in early December 7th. They issued guidance already. So they're basically just reaffirming that guidance.
The question about why they may be doing better, is that because Lowe's is more tied into the consumer and a little less tied into contractors than Home Depot is?
That could be a piece of it. I really think what the benefit is, and we've been talking about this for a long time now, is that there's more operational slack within the Lowe's business model. Okay. Every time I'm on your show, I mention Marvin Ellison, the CEO that took over Lowe's. I think he's fantastic. Years ago, he worked at Home Depot. I think he's done a great job, him and his team, repositioning Lowe's. And I think that's really what's happened here is the overall backdrop gets modestly more difficult. Lowe's has better internal levers that they can pull to drive their business. And again, I think we're seeing some evidence of that here.
As a result, do you like Lowe's shares better than Home Depot at this point?
Look, I like them both. I mean, on paper, I'd say, yes, I like Lowe's better because when I talked about that slack a second ago, the other point, and I want to make sure I make this really clear on your show, Lowe's is cheap. Lowe's trades at a substantial discount to Home Depot and a substantial discount to the market overall. And frankly, when I look at these valuations, even given all the recessionary concerns, the housing concerns out there, the valuation of Lowe's really makes no sense to me. I think the stock here is quite cheap. So yes, I think Lowe's is positioned better, but I've got to be honest. As I talk to our clients, and I think as the dust settles here, as an investment community, we get less worried about some pronounced recession. Money's going to flow aggressively into Home Depot as well, just because it's such a known quantity with investors.
Why do you think Lowe's trades at such a discount? I mean, we've known about Mr. Ellison. We've seen what he's been doing, and if you're just your thesis, what you play out makes a lot of sense. If there's more room for things to get tightened up there, you would think the market would have figured that out by now.
I laugh to myself about this all the time because I've been talking about this valuation gap between Lowe's and Home Depot. It feels like for 10 years, and then like you said, Marvin's been there roughly 5. We really haven't seen it close, despite some very clear indications of fundamental improvement. So look, I think to answer your question, and I've seen this elsewhere with other stocks, it's just a legacy type dynamic. It's maybe the market's just loath to let go of these legacy type dynamics. But over time, I'm fully confident that Lowe's continues to perform, closes that operating margin gap with Home Depot. We will see that multiple climb towards Home Depot and frankly the market overall.